Hey guys, it's your man Blackrue back with another video. Cue Indigo Saint. Let's get it. Indigo Saint in the building. Blackrue investing. Let's go.
Who's this producer?
Best believe I was Blackrue investing. With your money, you ain't gotta be guessing. Profits is what we manifesting. So we binge on that Blackrue investing. Best believe I was Blackrue investing. Got course in this race, we ain't resting. We got stocks, we got crypto with a blessing. So thank God for that Blackrue investing. Best believe I was
my man Indigo Saint. So it's your boy Blackrue back with another video. Catch me every Monday at 7 p.m. Eastern Standard Time on the Benzinga channel. Boom. On the Benzinga YouTube channel, where we do the Ruell Report, where we go over stock, crypto, mostly crypto. And if you guys aren't familiar with Benzinga, they're one of the worldwide leaders in stock news. They do news for TD Ameritrade, WeBull, amongst others. Very blessed to have a show on their network. And today we're going to be talking about value stocks. Now, before you get in, like before you just get like, oh my god, we're talking stocks, you crypto guys, I know most of my channel at this point is a crypto channel, but I said this in my video. If we come over here and take a look here, I said this in my video, stock versus crypto. And check this video out, by the way, stock versus crypto, that I am a crypto guy. There's a whole bunch of reasons why. Check out the video to find out. But what I also said in the video is, if you can find an undervalued asset and sell it for more, that is what it is at the end of the day. No matter if it's stock, crypto, clothes, trading cards, NFTs, cars, houses, it's all about finding an undervalued asset and selling it for a higher amount of money. That's all it is at the end of the day. Unless, you know, you can be in real estate, you can be in whatever field you want. You know how Blackrue, you know how I feel about precedent, right? And if we come over here and take a look, we got a 60-point drop. Last time we had a drop like this was Rona. And guess what? In Rona, there was some things where people were like, it's not coming back. It's done. It's done. There's no way. There's no how. So I'm going to show you like some of these stocks that people thought back then, there's no way, there's no how, it's done, it'll never recover. And sitting here a year or two later, it's recovered. It looks good. People got 3 or 4 X's out of it. And I can tell you personally, I got 3 or 4 X's out of certain things there. And I'll show you some of those stocks as well. So we got that same opportunity here. Over here with Rona, it was value stocks. Stocks that have really nice value. But since like businesses and doors were closed and people were like trapped in their houses, more or less, so to speak. Things like casinos, theaters, restaurants, airport things, airliners, cruise liners, all of these things were just kicked in the face and left for dead. If we come over here and look at, hold on guys, let me plug in my computer here. I think I have the, okay, so some of these things are left for dead, but if we come over here and look at, man, my thing is freezing up, so sorry guys. If we come over here and look at growth stocks, they are now the stocks that are being kicked in the face. And I'm going to show you some of these, and I'm going to give you guys some ideas like about stocks, crypto people. So and this is all trying to diversify our portfolio, and again, finding an undervalued asset. Okay, so let's take a look. So what I want us to look at is, okay, these value stocks that in Rona times, people were like, they're done, they're over, Nobody needs these. They're looking at a now type of mentality, right? There's nobody needs these. They're done. They'll never recover. Okay, so Gush. This is an oil one. Sitting here around $16 a share. You know, people were telling me oil is over. We got all of these electrical cars. We got all these electrical things popping up. Oil is done. Okay. Since 16 all the way up to 150. Now I invested 16. I think I got out at like 50 or something like that. So, you know, nice little profit for me there. I'm like, okay, that's like an all-time high. We good with 50. My sister, who I told her to invest in this, she stayed in. She's real happy right now. She's just, you know, she's giddy with it right now. So, that's another thing. So just note, guys, don't let people sway you if you've done your research and all of that type of stuff. I'm happy with the profit with the little 2x's or whatever I got. My sister's even happier over here, right? Occidental Petroleum, another one, sitting at like about $11. We got like a 4x now. Even Carnival Cruise Lines, which probably still hasn't really fully recovered. If we go back, take that back to 5 years, it was sitting something at like $8 a share. Was as high as 30. Still, if you sold it right now, you got a 2x from when it first dropped. This one, which I personally had, Crestview Equity Partners. This is another oil type stock. I had it at $4. I let it go somewhere around 16. This is also a stock that has a dividend, by the way. So I was just cleaning up down here, grabbing dividend stocks, and they did me really well. At this point, I sold it, like I got a 4x out of it, and I put it into another undervalued asset, crypto. So like I got way more bang for my buck taking that $16, putting it into something like Cardano, which at the time was like 30 cents. Excuse me, guys. Went as high as $1, so I really definitely stretched my money because I got my Cardano. I got it at 30 cents. I let go half of it at $1. It was as high as $3. I got tons out of my money for that. So very happy there. But you can see, had you held on from there to now, that $4 could have been what was that? 4 times 10 is a 2x, so we're about 8x. So 4 times 10 is a 10x, but 4 times like 8 or whatever, 32. So pretty much an 8x here if you bought down here. And the list goes on. I can keep showing y'all the stuff. Dave and Buster's as low as $18, 2x at this point. Cheesecake Factory as low as $5. You're sitting at 34 at this point. Bank of America as low as, these charts are beginning to merge. I don't know why it's doing that. Somebody didn't code it properly. Okay, as low as like $20. You're sitting at a 2x now. Dryden Restaurants, they have tons of different restaurants, y'all, just tons of them. As low as $35 a share. You're sitting at a what? 3 or 4x right now. And I know you crypto people are like, dude, I can get 10x's in my sleep, kinda. This is just a diversification of your portfolio, right? And just understand too, you see these time horizons, right? And crypto, these like 2-year time horizons, for some coins, people would be like, okay, that takes way too long. This is about diversification, and there's some say, I don't know what I think about this, but there's some that say, we might have to wait till another halving to get Bitcoin up really big again, but who knows? I think it's like 2 years for another till another halving, but part of our diversification, we want to get into other stuff. So let's see here. So all of these shows you the precedent of back then people thought growth stocks were done, or these value stocks were done. 2 years later, a year later, they were up multiple X's. So on the same token here, let's see. Sorry. So on the same token here, let's look at these growth stocks, and we got some really good ones. This is the bottom of our list, so don't worry about aggro. It's at the bottom of our list. Now, for us growth stocks, the things I was looking at were the ones that had really good earnings, because it seems like earnings don't mean diddly poop. I was looking at things that are in multiple industries, and I was looking at things that are in fintech and crypto, since crypto has been down. And I'm one of the people who believe that Bitcoin can get to 100K. I'm looking at Bitcoin miners and stuff like that can probably give you really bang for your buck. So let's just get into them. So right here, Bact, they're an exchange. I forget which country. I think it's like Indonesia, like countries around that area. We come look at Indonesia. Bact, it went really high when they announced that they had a deal in place with Mastercard. So remember how I told you guys swaps you're gonna get fees from them. So I'm taking it now that they have a deal with Mastercard. You can like use your crypto with that Mastercard to pay bills. So they're gonna get fees from that. So for them to be down at $4 and something cents after like surging, and they're talking about volatility, right? Look at this volatility, right? And we're not talking about like crypto where it's like 30 cents to $2 back down to like 50 cents or whatever. We're talking about $9 up to 50 down to 4. So take that for volatility. But anyway, so really great deal sitting here at 4. Another exchange we got, and this beeping here, guys, is my my alerts. So it's not a smoke detector or anything like that. It's just my alerts on my coins. So LCX is doing some stuff right here. It's back up to 9 cents. You know how high I am on LCX, but whatever. Let me just change that notification so it doesn't keep beeping while we're talking. Okay, so next is this one. This is going to be eToro. They're an Israeli exchange. And again, this is messing up. Let me try to... Okay. So they were as high as $15. They blew out their earnings. So this is eToro's earnings as a private company right now until they actually merge into this. And I'm going to show you here. The earnings don't mean a dang on thing when I get into it, but this is an exchange that's already running, of course, and already you can see like blowing out the water in their earnings. So as soon as this, like, don't touch too much into this, because there's still a possibility that the deal can fail. Like you can see right here, a SPAC deal fell through. So put only what you're comfortable in putting here, because if the deal falls through, usually they stay pretty close to the SPAC price, which is $10. But if the deal falls through, it could possibly go lower than that. But we can kind of use this as a precedent here. Like you can see, it went down a little, and there's a reason why it sticks to $10, because when the deals actually go through, if it's lower than $10, you can ask for your money back kind of deal from this. But let's just note that if this deal doesn't go through, you don't want to be putting too much into this, because the deal could possibly still not go through. But let's go to CleanSpark. These guys, they also mine Bitcoin. And you can see these guys were as high as, it's loading, $40 a share only get drained down to, God, they were sitting at $5 a share at the beginning of January. Oh my goodness. All the way down to this amount of share. And if we look at their earnings, I wonder. It's probably way better. Look at this. Look at their earnings. Every, like, they're telling, like, they missed here, but they're still $10 million the first time as a company. They missed here, still $41 million first time as a company. Looks like to me they need to stop. Like, they need to make better earnings estimates here. It looks like they figured that out, because like right here they said 27, or they said 30, 20, 23 when they hit 27, and they said 41, and they just barely missed it. They need to underestimate, it seems like to me. But let me show you another one. And CleanSpark, this is a company, they mine Bitcoin, but they also do microgrids. So a microgrid is basically like if you're off of if you were off grid, if you like bought a house somewhere in the middle of nowhere, Arizona, and you weren't like, your house wasn't going to hit the power grid, you could get a company like CleanSpark to come in and build you a microgrid with like some, some solar panels, some inverters, a battery or whatever, and this microgrid is going to make sure it regulates your power, it regulates your battery charging, so you get the optimum amount of power. Like, you get the optimum amount of battery charge, you get the optimum amount of using the power in your house, so that like there's really the least amount of wasted energy possible. So they took the same technology, which I thought was kind of brilliant by these guys, and they applied that to mining Bitcoin. So when I say Riot is a miner of Bitcoin, so it's CleanSpark, but CleanSpark's applying that technology, so they're mining Bitcoin like in a way where they're not wasting as much energy as Riot Blockchain, because they got this whole microgrid technology and software that they're using to do it. So they're really, really, really ahead of the game on that. And here you go. You see Riot Blockcoin, again, another company just steadily increasing that revenue, but the price is just trashed. So if you're a big believer that Bitcoin will at one point reach 100K, then I would think you would want to be in on these blockchain, those Bitcoin mining companies. So we went CleanSpark, we went Riot, we went to two Bitcoin exchanges, Bakkt and FTCV, which is going to be eToro. Let's do some fintech companies. SoFi, they do like stuff with student loans and all this stuff. They even have where you can trade stocks on their little platform, where they have like a stock trading app similar to kind of Robinhood. This was Chipmunk Polyapatia's baby. He even brought it up, like he even kind of had it like rivaling Robinhood at one point. Their earnings look pretty decent. Every year it's a bit of an increase. So SoFi still very high on these guys. Now, I want you guys to look at Open Door Technologies. Now, I heard that the way that they do their earnings is not true, kind of like the revenue, like the billions of dollars, like they're putting the home sales into the revenue, but like they're only getting a little percentage of like the home sales or whatever. But either way you slice it, they went from like 53 million all the way up to like 3 billion in revenue. So even if they're saying like, okay, every house is revenue sold and they're only getting a percentage of those earnings, they're at 3 billion in revenue, y'all. Like, come on now. Like, doesn't make any sense. Like, in every year, like here, it wasn't like we were looking at those CleanSpark and Riot ones. Every year, they're beating their estimated earnings. So doesn't make any sense to me why this went from a high of about 40 all the way down to 6.8 $6.86. Doesn't make any sense to me. But that's how you can see like the earnings really just they don't really matter all that much. So Open Door is another one. SPEC, this one's like a space company. They're building space technology to take private people up into space. And I know people were just like, there are people when this was like already at like $60. Who's gonna pay for that? They sold out all their tickets. And I'm gonna put it like this to y'all. So we got people like Elon Musk, Jeff Bezos, Richard Branson, who owns Virgin Galactic. We got them building space companies. Like I can go all the way into it on why like I think space might be lucrative, like all the way into like some crazy stuff into why I think space might be lucrative. The bottom line is rich people like this are not investing in space unless there's something up there that makes sense that they're going to make money off of. You don't have rich people like Bezos, Branson, and Musk investing in things that are going to quote unquote lose them money. So, sitting here at $7 a share, $7.30 a share. To me, I'm thinking this boy is definitely a buy. So, there's that. Last two we'll go over are Jumia and Upwork. Well, let's do Jumia, Upwork, and Lucid. So Jumia. This was touted as the Amazon of Africa. They even have a Jumia Pay thing that's kind of similar to Square. You had some proponents come out, talk about how they love Jumia, and sent it from like $30 all the way to $70, and guess what? They drained and they dumped on you. And you want to talk about crypto being volatile, crypto's funny money. You got people, and this was, I would think this was him, Citron. They're coming out talking about Jumia. Oh my God, Jumia, like they love Jumia. They brought it up and they dumped on you. So this is what you got these hedge funds doing this, right? So allegedly, to me, I'm just saying allegedly to kind of protect myself. There's no allegedly about it. Like, you look at this, use your eyes, you could see it. So and it's nothing in their earnings that said anything like different. Like, okay, they're doing bad or they're doing good. They're sitting at the same amount of money. So it's like, come on, but sitting here around like $7 a share. I'm thinking it's a really good thing. I used to talk Jumia. I made my money off Jumia. I was here at like $4 to $8. I got out at like somewhere around like 16 or 20, something like that. So I made my money on Jumia, and around about this time is when I started kind of switching over to crypto. So, but I think here at $7 a share, it's a really good deal. Again, Upwork's another one of these companies. We can go look at the earnings, and it's high as 60. It was high as $60, sitting here around like $18. Maybe it stops there. It looks like there's a little kind of resistant support point here at $18. Like if it breaks that support, it can probably go back down to 10 or 8. But if we're looking at these financials, man, if we're looking at these earnings. Let's bring it up. Calendar. They're blowing earnings out of the water. First time at $100 million as a company. And they're still growing 110s, 120s, 130s. But yet, here we at that. So, Upwork's going to be one for us to watch out for. We can kind of like nibble on it because it still looks like it's on a downtrend here. It still looks like it's kind of downtrending. Maybe they downtrended all the way back down to 6 or 7, like we saw with some of these other companies. But maybe maybe at 18, maybe you can dip your toe in a little bit. But it looks like it kind of needs to find a low before we really get in here. But it's definitely something for us to keep an eye on, especially with those always increasing earnings. Like I said, it doesn't look like it's found a low here yet, but it is something for us to keep an eye on. Where if we want to get in, we should get in. So there's Upwork. Next is Lucid Motors. Lucid was high as $60, and it's gone down to 22, and it's done nothing to like warrant going down to 22, other than people decided, okay, we're leaving growth stocks and we're going over to value stocks. That's like, it was voted car of the year. All of this type of stuff. It's done nothing to warrant this. Nothing at all. But definitely a great value here. Like, imagine if it like does some of the things that Tesla's doing. And unlike Tesla, I don't think it's going to have money problems, because I believe, don't quote me on this, but I believe it has some Saudi backers. So Lucid Motors at $22 a share. To me, seems like a pretty good idea. Doesn't seem like it's quite found a low here, but maybe it's something to kind of average, kind of scale into, because the lowest supports here are like $16, $17, and if it goes lower than that, who knows? But at $22 in my eyes, you're getting it already like for a third of what the high was, so you're getting it at a discount already there. So yeah, so those are the stocks we're gonna look at today. Maybe I'll do this every so often, like maybe once a week or maybe once every 2 weeks, because we kind of grown to be more of a crypto channel. But just like I said, it's all about finding finding an undervalued asset, finding something valued too low that you can sell later for a higher price. That's really all it's about at the end of the day. So we got those right there. Come on over, check out some of my previous videos.